Welcome back. Competition in the ETF market's heating up. Ron Barron's firm throwing its hat in the ring. It's got an ETF focused on small and mid-cap companies. Vanguard aiming for its first push with its stock-picking ETFs. Of course, we are talking here actively managed ETFs. And here to discuss the overall market, Jennifer Grancio, TCW's global head of ETFs. Nice to see you. It just keeps getting bigger, particularly on the actively managed side, not just on equities, but fixed income as well, where TCW obviously has a long history.
Yeah, it's phenomenal to watch the growth the last couple of years. If you look at ETFs today, something like 11 trillion and 1.4 as of a couple of months ago, $1 trillion is active. So it's been a huge acceleration. And even fixed income active ETFs, which are the newest of all, are growing over 40% every year.
Where are you seeing the most client interest when it comes to what you guys have launched and or what you're thinking about launching? We were talking off camera before we started. You were first in the market, for example, with an AI ETF. I guess you've always got to be thinking about what is next going to be attracting a lot of interest.
Yeah, for sure. And as TCW, our background is public-private credit. We've also been doing active equities for 50 years. And so if I maybe take that on the equity side and then the bond side of the portfolio, from a bond perspective, we're seeing people start to use ETFs in everything they do as investors and financial advisors. And so they're using them in the core bond portfolio as well. So in that space, we've raised over $1 billion in a core total return plus ETF that also has a very high 6% yield target. So that's Flexer by TCW, and that's a great example of where people aren't buying only mutual funds. They're really starting to use ETFs in the bond part of the portfolio. So top in its category, and we see other competitors in that same space. In the equity space, what we do is we have a line of thematic ETFs. And so if you think about the average portfolio, it has plenty of index products, small cap, large cap, a lot of index. And so what we do at TCW is we take that 50-year heritage as being a fundamental active investor, and we're bringing major long-term themes to the market. So AIFD is a way to get exposure to artificial intelligence broadly. Another one, powered PWRD, is a way to get exposure to this very, very broad energy transformation that we're seeing.
Why should an investor buy your ETF versus, I don't know, you came from BlackRock iShares, right, originally, versus a BlackRock ETF?
Yeah, I think if you think about it, there are a lot of products out there, and the way that we would think about it is if you start today and you're looking forward, there really is an opportunity for active management. If you look behind us, when money was free, it was harder to differentiate as an active manager. There was a mushrooming of passive, which other competitors really anchor around the passive part of the business. At TCW, we've always been about security selection, finding value, and fundamental work on actual securities. And so if you take that and look at how we pick bonds in Flexer, we're not just holding any downtown building. We're being very careful about choosing New York, prime real estate. People are coming back into the office. And so as an active manager, we really do think there's an ability, both in the fixed income part of your portfolio and in equities, to beat the indexes.
I wonder if there are any thematics in equities, not to give away secrets or R&D, but that you think are interesting, nascent, and haven't yet been codified in an actual ETF, things that we might be talking about in a year or so.
Yeah, I think there are a lot of things that could be put into an ETF. What we wrestle with at TCW is we don't want to develop a thematic product that is so narrow that we're not really helping you, that we're sort of expecting the investor to decide which battery in which car producer in order to get the upside of that trade. So what we do in Powered or AIFD is they're very broad. And so in the case of something like Powered, we're holding nuclear, we're holding data center cooling, we're holding old energy, we're holding efficiency plays, so very broad. So I think what we'll see in the market is we'll see a lot of narrow products continue to develop, and investors will have to decide, do they want very narrow thematic products on crypto, subsectors of nuclear, wind, or do they want these broader products where you're basically outsourcing to an active manager like TCW how to make those choices through time?
Right. Well, it does cater to people's interests and or particular themes that they're wanting to focus on. But, it's been many years that we've noted active management, typically from mutual funds or even hedge funds, trails the indexes almost every single year in many cases. What gives you the confidence or the belief that ultimately actively managed ETFs can do better?
Yeah, I mean, I think very different. Let's maybe come to the bond market and talk about in the fixed income part of your portfolio. In the fixed income part of the portfolio, the indexes just aren't that good. The indexes were never designed for long-term investing and savings. And so in a way, we would say it's almost easier in the fixed income part of the portfolio to do a better job of managing duration, managing downside risk, and doing issue selection. So we think that's why we're seeing the market in terms of total flows across all mutual funds, all ETFs. It really is going into active. It's not going into passive from a wealth investor perspective. And in the equity space, it's a good question. You know, you want to pick a manager like TCW. You know, over half of our strategies, 90% of the strategies are above median. So if you think of like, you know, you're performing or you're underperforming in any particular year, that's an important metric when you're selecting an active manager, which is through time. Do they tend to be beating index or not? And then for us, we think the broad themes is an interesting place to be active because you're not just picking, again, one narrow niche. You're asking the active manager to move around and move across sectors that are underrepresented in the index, because the indexes are so Mag 7.
Yeah, understood. I know, right. Jennifer, thank you. Appreciate it.